Greetings, members one and all of the Salivation Nation. Billionaire Ray Dalio's Bridgewater Fund poured almost $500 million into gold in the second quarter of 2020. Let's explore! Fascinating indeed. This comes to us from Business Insider, their Markets Insider section of the website. Very interesting indeed, and it just goes to show you that there's some big names that are starting to pay more attention to gold out there. We know that Ray Dalio is a gold bug. He is a billionaire investor, and he poured more than $400 million into gold in the second quarter of this year. As the price rallied towards record highs, daring in high-profile and amateur investors alike, luring in those high-profile and investor amateurs. Bridgewater Associates, which Dalio founded in 1975, increased its investments in gold through the world's largest exchange-traded funds, according to a 13F regulatory filing the company made late on Wednesday. Bridgewater raised its holdings in the SPDR Gold Trust from $600.6 million to $914.3 million, making it one of the largest investors in the fund, according to data from Bloomberg. The fund holding an SPDR is now its second most valuable. So one may make the claim that this is actually manipulation to the upside. And that's why I've never really been sold on manipulation, because there's just as many arguments, and I think this is a strong one, that there's manipulation to the upside because they're making it one of the largest investors in the fund. Essentially, they have poured almost $1 billion into the fund. Crazy, amazing. The fund's holding an SPDR is now its second most valuable. The company increased its holdings in the iShares Gold Trust from $176 million to $268.4 million. This investment is now Bridgewater's sixth biggest stake, up from ninth from the previous quarter. ETFs are a common vehicle that investors use to gain exposure to the underlying gold price without having to take delivery of or store the metal themselves. Well, what fun is there in that? That's a question I have. Why wouldn't you want to hold the metal itself? The fund issues shares that are then backed up by physical gold. Well, I'd like to see proof of that too. Because if they were to cash them all out, I'd love to see that delivery and how that would play out. It's never really been tested. I've not heard of anybody trading out these issues that are backed up by physical gold. And how much physical gold? Is it backed up ounce per ounce? I don't know. Be very curious to know, to see that situation. According to the U.S. debt clock, which sources say that that's definitely not true. There's a lot more paper than there is the metal to back it up. With the rally in the gold price, investors have piled in the ETFs at breakneck speed this year. ETFs around the world now own more gold than the German central bank, the world's second biggest holder of bullion after the United States. Bridgewater's total portfolio was worth more than $5.96 billion by the end of the second quarter, up by around $1 billion since the first quarter. SPDR Gold is the world's largest gold-backed ETF, boasting 1,251 tons of gold, or around 40.21 million ounces in holdings. The iShares Gold Trust is the second biggest, with around 16.1 million ounces in holdings. Gold has faced a roller coaster journey all year, hitting record highs above $2,000 an ounce. Yes, it sure has, but that roller coaster has mainly been going up during that time. And gold broke the $2,000 mark for the first time over the start of the month. The price has gained more than 26% so far this year, making it one of the best performing commodities and outpacing several peers, even the tech-savvy NASDAQ. After appearing unstoppable, the gold price tumbled by the most in a single day in 7 years on Tuesday, as analysts warned the rally was overextended and investors secure profits. I would call it overheating, and that's what happened. And many of us were predicting that that would happen and preparing people for that probable cause. Gold, which has profited all year from a weaker dollar, got another boost in late July when diplomatic relations worsened between U.S. and China. The U.S. government is expected to agree to another multi-billion-dollar stimulus package to help Americans struggling to cope with the economic devastation of the coronavirus pandemic. This will likely weigh further on the dollar and depress U.S. borrowing rates as Washington seeks to keep credit cheap. Keep in mind that one agency, which I've not heard of before, but I guess the rates credit, has downgraded the United States credit also. As gold does not yield a return, it makes it more attractive for would-be savers to hold it, as they end up sacrificing a lower return than they normally would when rates are high. Gold is currently trading at $1,935.69. It's actually gotten up further than that. That's of this morning. And so where is it now? It is at about $1,951.60 in the ask price. Indeed. But while gold's decline this week initially caught traders off guard, the outlook for the market remains bright. I tend to agree with that. Analysts told Business Insider that despite Tuesday's near 6% drop, several factors such as the weaker dollar and growing geopolitical uncertainty suggest gold has room to rally. It does. I believe it will stay in these record high territory for a while here till things play out. But once things do calm down, and again, that's with the underpinning of massive debt that we are growing and deficit spending. If everything else calms down, well, I think we will see lower gold and silver prices. And see how it plays out for sure, but wanted to extend certainly a multitude of gratitude to all of you for taking the time to watch this video. And what are your thoughts about this particular situation? Is this an example of manipulation to the upside? Or do you think it's a manipulation to the downside? I guess one could walk away with that as well. But nonetheless, it is what it is. So post your thoughts below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.